Welcome to Explain the Charts, everyone. Today, July 20th, 2025, we're doing an in-depth analysis of the USDJPY pair, looking at both recent news and the raw chart data. Let's start with the current events shaping this critical currency pair. The Japanese yen is currently clinging near a multi-month low against the US dollar, according to recent reports, with an important Japanese election looming on Sunday. This election could be a significant catalyst for JPY volatility, depending on the outcome and its implications for monetary policy. Adding to the mix, U.S. President Donald Trump has reiterated warnings of a 10% tariff on certain countries, a move that could potentially strengthen the U.S. dollar further. However, contradicting this, U.S. Treasury Secretary Bessent has advised against ousting Fed Chair Jerome Powell, stating that the Federal Reserve is already signaling rate cuts this year. If the Fed indeed proceeds with rate cuts, this would typically lead to a weaker U.S. dollar and could provide some much-needed relief for the Japanese yen. In the immediate term, the U.S. dollar has experienced an upside correction this past week, gaining against G10 currencies and most emerging market currencies. This recent dollar strength aligns with what we've been observing on the USDJPY charts, as the pair has shown a notable rally. Now, let's turn our attention to the charts themselves, starting with the daily time frame to grasp the broader market structure. Looking at the full range of data, we can see USDJPY has been in a clear long-term uptrend, marked by higher highs and higher lows. Key resistance levels have historically been around the 155 to 158 region, which the pair tested multiple times in late 2024. On the downside, significant support has held firm around the 140 to 143 area, particularly visible during pullbacks in September 2024 and early 2025. Let's zoom into a specific period of interest: the sharp volatile move from late July to early August 2024, between July 24, 2024 and August 5, 2024. Here, we witnessed a significant reversal where USDJPY dropped sharply from highs near 155.76 to lows around 141.679. This rapid depreciation of the USD against JPY, marked by strong bearish candles with high volume, could indicate a period of potential Japanese government intervention or a major shift in global risk sentiment. This highlights how quickly market dynamics can change and why understanding macro events alongside technicals is crucial. Returning to the broader daily view, observe the recent price action, particularly from June 2025 onwards. After a multi-month consolidation and a dip to around 143.37 in early July 2025, USDJPY has staged a solid rebound, now trading around 148.827 as of July 18, 2025. This rebound confirms the upside correction mentioned in the news, showing strong buying interest in the US dollar. The pair has overcome minor resistance around 144 to 145, indicating bullish momentum in the short to medium term. For traders, the 147.5 to 148.0 zone is now acting as immediate support, having previously been a resistance point that was decisively broken. Switching to the 1-hour chart, we gain a closer look at the intraday movements and can spot more granular support and resistance levels. Over the past few days, the price has generally been moving upward, forming a series of higher lows and higher highs. The current consolidation around the 148.7 to 148.8 range on this hourly chart suggests that traders are pausing before the weekend and the Japanese election results. Immediate support on the 1-hour chart can be identified around 148.4 to 148.5, which has held multiple times over the last 24 hours. Diving into the 15-minute chart, we see the most immediate trading environment. The current price action reveals tight consolidation, with bids and offers battling around the 148.7 to 148.8 level. Volume has been relatively consistent during this consolidation, indicating neither strong buying nor selling pressure at this exact moment. For short-term traders, This chart offers insight into potential breakout or breakdown opportunities. A break above 148.90 or below 148.70 on higher volume could signal the next immediate direction. The 15-minute chart shows a minor support around 148.75 and minor resistance at 148.90, making these critical levels for intraday trades. So, what are the reasons to be bullish or bearish on USDJPY, both short and long term? Short-term bullish sentiment is fueled by the recent US dollar upside correction and the general risk-off sentiment if the Japanese election introduces uncertainty. A break above 149.2 on the daily chart would reinforce this short-term bullish view, potentially targeting 150.0 and then 151.0. However, short-term bearishness could emerge swiftly if the Japanese election results lead to unexpected JPY strength, or if fresh commentary from the Fed strongly emphasizes imminent rate cuts. A fall below 148.0 and especially 147.5 would signal a short-term reversal to the downside. Long-term bullish arguments hinge on a hawkish pivot from the Federal Reserve, perhaps delaying or softening their promised rate cuts, combined with continued U.S. economic outperformance. Escalating trade tensions, as indicated by President Trump's tariff threats, could also bolster the safe haven appeal of the U.S. dollar, pushing USDJPY higher towards the 155 to 158 highs. Conversely, long-term bearishness would manifest if the Fed commits to aggressive rate cuts this year, significantly reducing the interest rate differential between the U.S. and Japan. Additionally, sustained strength in the Japanese economy and any shifts by the Bank of Japan towards normalization could trigger a longer-term downtrend for USDJPY, potentially retesting the 140 to 143 support zone. To recap, several important price levels stand out for USDJPY. Immediate short-term resistance is around 148.90 to 149.00. Breaking this could see the pair challenge 149.50 and then the psychologically significant 150.00 level. On the support side, 148.40 to 148.50 serves as current intraday support, followed by stronger support at 147.50, and then the more robust long-term support zone of 145.00 to 146.00. Beyond that, the critical long-term support floor is around 140.00 to 142.00, a level that has historically triggered significant rebounds. For unbiased predictions, a move towards 149.50 to 150.00 is moderately likely, 65% probability. In the very short term, if the Japanese election results do not surprise with strong JPY positive outcomes and if the US dollar continues its recent strength. This would be reinforced by any hawkish comments from US economic officials or stronger than expected US economic data next week. A retracement back to 148.00 or even 147.50 is also moderately likely, 60% probability. If the Japanese election results are unexpectedly positive for JPY or if the Fed's dovish signals intensify. Watch for volume on any breakouts or breakdowns from current consolidation, as it will confirm the strength of the move. Also, pay close attention to statements from the Bank of Japan and the Federal Reserve, as their policy outlooks will heavily influence the long-term direction of USDJPY. The Japanese election results on Sunday are the most immediate and significant upcoming event to monitor for short-term trading decisions. Thank you for joining Explain the Charts, and remember to always do your own research before making any trading decisions.